Welcome back, traders. Sentiment remains positive around AMC and GameStop, even though the hedge funds continue to short heavily. However, they may be running low on ammunition. So this is for 4/14, which is Wednesday. The data's come through now. The short volume ratio on the day is 32%. Very high once more. There's more shares available now. It was as low as 25,000 during Wednesday afternoon. So it's increased now. They can short 90,000 shares as of Thursday. And then the short borrow fee rate has actually gone up quite a bit. So although they have a few shares available to short with right now, it'll be expensive for them to do so. And that's generally how it's been going. So as time goes on, holders are accumulating and the borrow fee rate goes up and up. To continue with the positive sentiment, this is a fun little article from this random website. I'll pin it in the link below in the comments. So it's from January 25th, so a few months ago, but it says that this is when the CEO stated that bankruptcy is completely off the table for AMC. So back then it was a big deal. It was a lot of fear and FUD about the bankruptcy situation. They were able to settle a lot of that debt, so it's all good now. He quoted Churchill, Winston Churchill, saying, "We shall fight on the beaches of the AMC army." Maybe we should start calling it that. Everyone holding AMC, the AMC army. It costs us a little money. The interviewer asked, would it be better financially for AMC to have kept the theaters closed, considering the low attendance during the pandemic? He said it costs us a little money to open rather than shut, but we thought it was a very important statement that the largest theater operation in the world is open for business. I would point out with our AMC safe and clean protocols, we've had millions and millions of guests coming to our theaters since August. We're not aware of even one case of transmission of the virus at our theaters amongst our guests. We think it was a very good decision to stay open, and we're glad we did. Admittedly, it did cost us some money to stay open, but that was an investment in our future. Great stuff. Even back then it was bullish. Ever since, there hasn't been much bearish sentiment, only on the mainstream media. People are still excited about GameStop announcing that Ryan Cohen is going to be the chairman, and he plans on focusing towards the online sales and marketing for GameStop rather than the more outdated retail locations. And it's not actually going to take place until June 9th at the annual shareholders meeting. That's a date to keep on the radar for later. Big news about the Coinbase IPO, and I was warning people not to enter this too heavily. I recommend, instead of entering on a long for an American-based United States operations company, I would recommend, instead of doing that, to actually invest directly into crypto itself. Not your keys, not your coins. It's tough to trade something like this. Look at the chart. It's hard to even make any sense of this, okay? And you may want to wait for some more patterns to develop here before making any rash decisions. So going into the 15-minute intraday chart, there's not much here, but there's something. And basically what we have here is a big decline on the day, down 25%. So it's too early to say, but perhaps this is a better entry area than right where it opened. Technically speaking, if you're feeling interested and inclined to scoop up some shares of this, it's better to wait a little bit on an IPO and see some sort of confirmation. So going forward for the bulls, it's going to need to see a push above here and probably start closing some real candles up there for support above these last candles for any sign of a reversal of a bull run whatsoever. It hasn't shown that yet. Be very careful. AMC is putting in some nice signals, so buyers have stepped in here on the 4-hour chart. Remember, the 4 hours, Denwo's favorite time frame for swing trades, especially on the analysis side of things. So we're looking at a huge buy wick right here. A lot of people stepped in towards the end of the day on AMC as well as early in the morning. So it actually saw a breakout above this resistance trend line, which is a pretty big deal because it's been holding as resistance for this entire move down from the last local high at about 1450. That's been holding the price down, and now it is indeed finally closing above that resistance line. So that's a confirmed breakout at the moment, and it also retested it down with the wick below here, right at the trend line, perfectly. So it's a bounce right now. Question is how high is it going to go? Is it going to continue? And based upon the indicators, it looks like it. So it is also broken right through here at 977, broke through the 969 resistance, the 970 long-term trend line here. So that was an important area as well. The bearish case is that it has not closed above there just yet. It is looking to do that soon, hopefully. So that'll be our confirmation on a continuation, on a real recovery here, and then it can go much higher from there. So it looks good right now, and as a matter of fact, going into the day trading chart, there's more there's more good signals here, and I'm going to keep things a little bit short and sweet today. I want to show you a few other charts. So what I really want to point out here is all about divergences today, guys. And what's important about that, I'm not going to explain it too much right now, but the important part is that it's really hard to identify divergence properly because it takes the right timing, the exact right timing. If you miss it on the chart when it happens, it's too late to identify it later. It's already played out by then. It doesn't have the same meaning as when you first identify it. So if you're able to spot things like that as soon as they happen, those are opportunities that can give you a slight advantage over the markets. So what I want to point out here, there's some bullish divergence on AMC, and I think that's a big reason why we saw this nice bounce. So it's going to depend on the time frame. So the RSI is actually going to look different based upon different time frames. On the hourly chart here, it looks very nice, so, and clear. I pointed this out the other day. As soon as it came through on the chart, it started to play out so far. It may keep going higher because of this signal. So this orange trend line sloping down from the lows. We have a low here and then a lower low. And now if we take a look at the RSI at those two exact time points, this is a buy box area on the RSI. Anyway, here's that low, the first one, and here's the lower low. And it's actually an uptrend on the RSI, and we combine those two factors, the uptrend on the RSI and the downtrend on the actual candle bars. Well, that's bullish divergence, classic bullish divergence, and we'll get more into that as time goes on. But for now, well, here's the GameStop chart, and it did have a nice green pump yesterday. Closed up on the day 18% green. It did close right below this hard resistance though, and that is a problem right now. It really is. That resistance, $171, $170. It's a very solid resistance line. There's reason for it being there, based upon previous price action, wicking off that line many times. So it's a strong resistance right now. The price is sitting right underneath it, so it's a little early here. There's no bullish confirmation just yet on a swing trade. This would have been a nice day trade entry, and then exiting 20% on the day in the green without further risking your portfolio. That's how to trade GameStop right now. There's no swing trade confirmation here on the longer term charts just yet. I will let you know as soon as that happens. As soon as we see some kind of development and test and push up here. But keep in mind, the next earnings report on the chart down below here is coming up on May 27th, according to this. There's a chance it trends down leading into that earnings and breaks out just before it starts pumping, maybe a couple weeks before that earnings, in about a month from now. But I am waiting to see any kind of continuation results here, any kind of push back into this bearish box, or any kind of breakout above this trend line. We don't know when or where that's going to occur. Alright, so, and this is an unbiased analysis. I'm just translating the chart, what I'm seeing here. And when things change, I will change my thesis as well. So, guys, this is the hourly chart on GameStop. So check this out. It is relevant, and I want to make you aware of it. Remember, it's all about divergences today. So note this point here from Wednesday. This is a pretty high point. It's actually higher than these last points, specifically this one. When you zoom way in, it's easy to see that's much higher. It's hard to see if you're not watching this indicator very closely. So it is in fact there, technically speaking. If I make a trend line, it's sloping upwards, okay, on the highs. the highs of the RSI. And now taking that same area, the highs of the price action on the candle bars, well, that's right up here and right down here. And what we have there is a downtrend on the candle bar price action. Those two combined is actually going to be hidden bearish divergence, which is a bearish signal. This chart looks much cleaner because it's a logarithmic chart. The same pattern is in effect. I just wanted to point that out, that these bullish cases have not played out currently. All this resistance above here is still valid. This line, this projection is the one that's been playing out so far. So it's still early for any type of swing trade entry confirmation. Just real quick on NAKD now, continuing with the divergence theme. I'm not going to get too much into the chart patterns right now, but this is the long-term support line as well, right about where it is right now. Not only that, taking these points from here and this lower low, I've been really trying to identify bullish divergence lately, now that these appear to be reaching some sort of bottom. So we have a downward slope there, and we actually have an upward slope on the RSI. That's classic bullish divergence. We have it on CTRM. It's not just on NAKD, so that's going to be from these points up here and down here, sloping down. RSI sloping up, as a matter of fact, those same time intervals, like so. Classic bullish divergence on NAKD and CTRM. Now this is on the 1 hour chart, so it's not super meaningful, but it is there. And to wrap things up with CCIV Bay, I've been continuing to extend and project the magic circle, and I've found some more relevance here, so it still lines up nicely in some of these previous areas on the magic circles. So it has relevance in the past, and it has relevance in the future. So the further this circle projection, this Fibonacci, gets extended outwards over time, well, the more let's call it, the more tension that CCIV is building up, and eventually it's gonna spring either up or down, but it's right in the tight area right now. I'm expecting a move any day now on CCIV. Great stuff. Thanks for tuning in. I'll see you Friday morning for the live stream, 9 o'clock a.m. Eastern. Happy trading. Take care.